pretty fucking crazy if you ask me. So if you bought LSTR, during the LSTR pre-sale at 90 cents, you're up 461.1%. So about 60 days to make 461. Not too shabby, if you ask me. You're effectively getting paid over 20% yield on this lottery ticket that's worth $1 at all times. It is like buying a lottery ticket for 72 cents that you can always trade back in for $1. And while you wait to get a winning number, you get paid a 20% effective yield. So you paid 72 cents for this thing that you're hoping you turn in for, let's say, $3 one day. And while you wait for it to be worth $3, you get paid a 20% yield. Hey everybody, today's October 3rd. Welcome back to another video. I've been wanting to make this one all week, but I've been just crazy busy, as you've probably seen with all the different Leo updates that have been rolling out. So wanted to talk about the LeoStrategy update. So basically every Monday, LeoStrategy puts out this post, and so far we don't have the LeoStrategy dashboard quite just yet, but I know that they are working on it, and hopefully we have it soon. I like to do a little video every week in the meantime, where I basically just look at the dashboard screenshots that they and then I can kind of analyze from there. So the screenshots are in their post from Monday. Today's obviously Friday, so clearly I got quite delayed in making this video. But I think it's important to run through all the numbers and really talk about how LeoStrategy works from a strategic standpoint in terms of strategically scaling up their balance sheet. I know that a concept and kind of organization like LeoStrategy can be a little bit confusing to a lot of people. So in these videos, I try to break it down really simply. So let's get into it. The first screenshot shows obviously the Leo part of their dashboard as of Monday. And for the rest of this video, just assume that it's still Monday. Since Monday, the Leo price is higher. The LSTR price is higher. They've obviously acquired more Leo, but it's otherwise relatively the same, right? In this, they show the Leo supply, which is 29.5 million. If you don't know, Leo has a max supply of 30 million tokens, but there is a burn mechanism. All 30 million tokens are in circulation, and the Leo bridges are cross-chain bridges that allow Leo to operate on multiple blockchains simultaneously, and they charge a fee every time someone wraps or unwraps Leo. And that fee is burned. So 100% of that fee gets burned. So basically, Leo is deflationary from actual revenue from cross-chain bridging. So obviously, a really bullish thing for Leo. So you've got 30 million total Leo. In the past couple weeks, about 500,000 Leo, I think now maybe over 600,000 Leo, has been burned. So, and that's all from the Leo bridges. So that means that we've seen well over or close to 2% of the supply of Leo get burned. So with 29.5 million total Leo in circulation, LeoStrategy holds, as of this post, which I know it's now over 3, they hold 2.986 million Leo, which means that they own more than 10% of all Leo that is in circulation. So what they do with their Leo is they migrate it to Arbitrum. So they buy Leo on whatever chain they can buy it on the cheapest. Usually that's Hive Engine. They buy Leo there. And then they unwrap it from Hive Engine Leo to native Leo on Arbitrum, and then they stake it as S Leo on Leo. And then LeoDex pays USDC every single day. I actually just saw right when I was recording this, they posted a screenshot. They've earned 25 USDC today from their Leo stack. So they take 100% of the USDC that they earn and they auto compound it back into more Leo, and then they stake that for S Leo. So basically, any Leo they earn or any USDC they earn goes to buying more Leo and auto compounding their S Leo stake. So that's obviously very good for Leo. LeoStrategy can never sell its Leo, and it can, it basically, the mandate is that it just permanently continues to grow its S Leo stake. So ultimately, really great for the Leo economy. What this means is that basically more than 10% of the Leo supply via LeoStrategy has now been locked up permanently and can never come back to the market. So that's ultimately a great thing for reducing the float and making Leo more valuable in long time frames. So the Leo yield. Sorry, screenshot got messed up. The Leo yield is obviously like the key metric here, right? So Leo yield is the amount of Leo that was added to the balance sheet. So basically, you take the current Leo holdings from the week prior, and then how much Leo they bought over the course of the week. And then you divide those and you get the amount of growth in the Leo balance sheet holdings, and that gives you the week-to-date Leo yield. If you annualize that, you basically multiply it by 52, you get 392% per year. So basically, if you hold one LSTR, you earned a 392% APR last week simply by holding LSTR. And that that yield comes as Leo. And the reason why is because one LSTR share is backed by whatever Leo is held on the balance sheet by LeoStrategy. So as that Leo on the balance sheet grows, the per share, the LPS of LSTR tokens continues to rise. And we'll kind of get into that later in this video. So the Leo gain was 209,562 Leo. That's how much Leo that LeoStrategy bought. In terms of dollars, that was 27,243 USD in weekly dollar gain. If you annualize the dollar gain and the Leo gain, you get 1.4 million USD is the projected annual gain at this rate, or 13 million Leo is a projected annual gain in Leo terms. Obviously, that assumes that the Leo price stays the same. So if the Leo price goes down, that number would be higher. If the Leo price goes up, that number will be lower at the exact amount of USD that is inflowing to the fund right now. So obviously, as LeoStrategy matures, the goal is increase the USD inflows to the fund, which means buying more Leo every single day. One thing I wanted to talk about is I've mentioned that I think the Leo yield annualized will be in the triple digits for quite a while. So I think it'll be at least 100% for a while. What's interesting is when you have less holdings to begin, it is a lot easier to have a high annual gain, annualized percent gain. So when those Leo holdings continue to grow, and they obviously are every single week, having a high percent gain is going to be harder and harder to achieve. Some weeks it's 500% APR, some weeks it's 300% APR. This week it was 392% APR. As the fund matures, the percent APR is definitely going to go down. And that is not necessarily a bad thing. That's just really common sense. If you have a million Leo and you add 100,000 Leo to your balance sheet, well, that's a 10% APR, 10% gain. So if you have 10 million Leo and you add the same 100,000 tokens to your balance sheet, that's only a 1% gain. So obviously, as the balance sheet scales, simple math, that means that the percent gain is going to be harder and harder to be, a higher figure. So anyways, I think it's going to be over 100% for the foreseeable future. LeoStrategy is still in the very early stage growth phase. So I think it'll definitely maintain this triple digit percent growth that we've been seeing these past couple weeks. But I do expect the APR to decrease over time. And that is not a bad thing. I mean, LeoStrategy could actually be increasing the amount of Leo that they're buying every week, but the APR could continue to go down. And it's like I said, it's just because the basis is getting bigger and bigger continuously. And since they're never selling Leo, the basis only goes up and to the right. So it doesn't matter if they add 1 Leo or 100,000 Leo over the past week, their basis is continually getting bigger, which makes it harder and harder. And because Leo also has a finite supply, literally impossible to maintain a certain APR. So APR going down, not necessarily a bad thing, but it is still 392%. So obviously pretty fucking crazy if you ask me. So the other metrics, we're talking about Leo volume. We don't need to get into that for this. So here they talk a little bit more about the Leo yield. I kind of just ran through all of that. Here's the next page is the LSTR page. So LSTR now is trading, I think, for like $5.30. So LSTR is very interesting because it is basically an investment in the growth of LPS. So the more that LPS grows, the more that LSTR is worth. So you can value LSTR in terms of MNAV, and we'll get into that. So the current price of LSTR, at least from these slides, and like I said, we're just going to go off of these slides, even though the numbers have improved since Monday. The current price of LSTR is $5.03. In the pre-sale, it sold for 90 cents per LSTR. So if you bought LSTR, during the LSTR pre-sale at 90 cents, you're up 461.1% in terms of performance, and that obviously August 4th. So that was almost 2 months ago to the day. So about 60 days to make 461. Not too shabby, if you ask me. And I obviously bought a pretty fair amount of LSTR. So where are we at? The current MNAV is 1.3, and the LPS I kind of glazed over is 29.858. Obviously, to get the LPS, you just take the current outstanding shares of LSTR, which is 100,000, and then you take the total Leo holdings and divide it. Since they have 2.985 million Leo, and there's 100,000 LSTR, the math is very simple. You get 29.858 Leo per share of LSTR. With the Leo price at 13 cents, that means that the LPS is $3.88. So what that means is that for every one share of LSTR there is $3.88 worth of Leo backing that share. So the MNAV is trading at a 30% premium. And a lot of people might ask, well, why? And by the way, before the MNAV was trading at a discount. Now the MNAV is consistently trading at a premium, usually hovering between around 1.5. A lot of people ask, well, why would something trade at a premium to its net asset value, which is what NAV stands for? And the reason why is because you need to not only value the current holdings, but you also need to value the future holdings at some degree. And if you want to dive into this from a more fundamental perspective, I've been doing some research on like PE ratios, and obviously this is something that people talk about when it comes to MicroStrategy, is usually in the stock market, you don't actually buy a stock like Apple, for example, at 1x earnings. You buy it at a multiple of earnings. So for example, Apple might trade at a 30 PE ratio. What that means is you're actually buying, for every $30 you spend, you're actually buying $1 current earnings. It's projecting out the future earnings of Apple, so that when you buy shares, you're actually not only buying what the current revenue is, you're projecting out that you're getting like 30 years worth of revenue, right? It'll take you 30 years, and I'm just using very simple numbers. This is not actual Apple numbers, but it'll take you 30 years to actually get the value of what you're paying today in terms of revenue back, right, into the company. With LSTR and with MicroStrategy and strategy companies in general, the way people are looking at this is that you not only value the net asset value today, which is in LeoStrategy's case, the roughly 3 million Leo on their balance sheet, you also need to value the fact that it's growing at a 392% APR, which means that at the current pace, if you buy one LSTR today, you predictably know it's going to grow somewhere around 7, 8, 9% per week for the next who knows how long, right? And it will just continue to grow. Obviously, that percent, like I was saying earlier, will change and decrease as the fund itself increases the total Leo on its balance sheet and the principal grows. But over long periods of time, you value the current net assets, which would be a 1-to-1 ratio, right? So if you valued LSTR at 1-to-1, you assumed there would be no growth in the Leo added, then it would be at one LSTR should be worth $3.88. If you value not only the current Leo on the balance sheet, which would be $3.88 per share of LSTR, but you also value the future Leo that's going to be on the balance sheet, well, now the MNAV premium needs to trade higher in order to account for that. So at the current growth rate, if you look at the growth rate of LeoStrategy compared to like normal Bitcoin treasury companies, the MNAV of LeoStrategy should be in like the double digits. Like it should be well over 10. But obviously, market dynamics are different. When you look at a company like MicroStrategy, it's worth, obviously like $100 billion. So there's a lot more confidence in something like a G. So they trade at like a 1.5 MNAV, but their velocity of growth, the speed at which they increase Bitcoin per share, is nowhere near what LeoStrategy is doing right now in terms of the Leo yield. So Leo yield is just another way of saying what is the velocity of LPS growth. So I actually think that LeoStrategy LSTR is trading at a discount relative to the MNAV in terms of not the current Leo holdings, but the current Leo holdings plus the future expected Leo holdings. So very hard to put numbers to that. You can obviously, one thing I've been doing is using ChatGPT to like try to model some of these things. And if you say, well, you have a treasury company that's growing at 7.5% per week in terms of its treasury holdings, well, then you can kind of model out what the MNAV should actually look like. And in my opinion, this MNAV is very cheap relative to how fast LeoStrategy is growing. Just my 2 cents, obviously not financial, but there's a reason why I hold, what do I hold? 15,000 or 20,000 LSTR. I think about 15,000, and then I have the rest pool. So the Leo holdings, we already got into that. The value of the Leo holdings is $388,000 right now. There are 100,000 LSTR equity shares, which means that the current equity value is 503,000. So basically the combined LSTR economy is worth the Leo holdings plus the LSTR equity, which would be 888,000 roughly USD. So that's pretty bullish. Obviously, in really just 2 months of operating, LeoStrategy has been strategically scaling and building something pretty incredible. So here it looks like, they've been talking about, and I obviously read this on Monday, so it's not fresh, but they were talking about the projecting out essentially what it would look like when LeoStrategy holds 10 million. So at 10 million Leo and 150,000 LSTR, the LPS per share, the Leo per share would be 66.66 Leo per share. So if Leo is worth $1 and the MNAV premium stays the same, one LSTR would be worth $86.67. So obviously significantly higher than the $5 it is right now. And then also, by the way, the bullishness of 10 million Leo, which is 1/3 of the supply being permanently locked as S Leo and just auto compounding USDC back into more Leo is obviously very bullish for the Leo token itself, which is then bullish for the LSTR token because it's based on the Leo token. So obviously all very reflexive economics, which are fun to see. So the next slide is Surge. So Surge is right now trading for about 72 cents in the pre-sale. So that's obviously a hefty discount on the $1 floor price. And I know that LeoStrategy is pushing to sell out Surge as soon as possible because the way, and let's get into the market makers after I go through this slide, but they're pushing to get Surge sold out so that the market making operations can scale. And we'll get into that. So the current conversion value of Surge is 10 cents. The floor price is $1. So what does this mean? It means that one Surge, and I've seen some misconceptions that Surge is a stable coin. Surge is not a stable coin. Surge has a floor price of $1, which means that in the worst case scenario, one Surge is always worth at least $1. It is never worth less than $1. So you know that if if LeoStrategy liquidates, worst case scenario, in the unlikely event of a liquidation, Surge holders live at the top of the preference stack, which means that they get paid out first at a price of $1 per Surge. So if you have 100,000 Surge, that's worth $100,000 no matter what. The conversion value is basically the long-dated call option that is attached to Surge. So the way I like to explain Surge is that it's like having a lottery ticket that pays you a yield while you wait and has a $1 turn-in value at all times. So basically what that means is you buy a lottery ticket for 72 cents, and then you know that you can change that lottery ticket back in for $1, worst case scenario. So your downside is protected. You actually have built-in upside from the pre-sale. And then if LSTR performs, so if LSTR goes to $50 and beyond one day, like they kind of modeled out in the post, then you can convert that lottery ticket into LSTR tokens and then either sell those or just hold those. It's up to you, and you can realize a profit. But where the fun part comes in is that while you wait for that lottery ticket to be a winning number, you get paid a yield. And that yield is 15% on Surge at $1, which obviously it's a fixed yield. So if you buy it at 72 cents, the effective yield, and you can see it here in the slide, is 20.738%. You're effectively getting paid over 20% yield on this lottery ticket that's worth $1 at all times in order to wait for you to get a winning number and then turn in that lottery ticket for more money. And Surge can trade for $2, it can trade for $5, it can trade for $10, it can trade for $100. The value of Surge is not capped. So that is where it is different than a stable coin. A stable coin tries to maintain a peg around $1, which means that its upside and downside are capped at $1, or roughly, within a few pennies for good stable coins. Surge is not like that. Surge is, like I said, and I'll reiterate that because I think a lot of people still, don't understand it. It is like buying a lottery ticket for 72 cents that you can always trade back in for $1. And while you wait to get a winning number, you get paid a 20% effective yield on that lottery ticket. And one day you hope to turn that in for more money, whether it be $2, $5, $10, or whatever. So you paid 72 cents for this thing that you're hoping you turn in for, let's say, $3 one day. And while you wait for it to be worth $3, you get paid a 20% yield. I hope that makes sense. I feel like it's been said so many ways, but I've been trying to come up with a very concise answer when people ask me about how exactly, my opinion of Surge works. That is, I think, the best way to explain it. There's currently over 300 Surge token holders, and that continues to grow every single day. It shows the market cap of Surge. Obviously, the market cap doesn't really get that interesting until Surge is sold out. So once Surge is sold out, tracking the market cap will be a lot more fun because then obviously the open market prices Surge. The weekly frequency of dividends is 52 times per year. Obviously, it's a weekly dividend. And the next distribution is October 5th at Monday. October 5th, Monday at 0 o'clock UTC. I said that all backwards. And then it shows you the amount of LSTR and HBD distributed. So far, there's been over $3,000 in dividends distributed to Surge holders. So if you hold Surge, you get that 20% effective yield paid out to you every single week. And if you get paid in LSTR, that's a whole topic for another video. But if you get paid in LSTR, which is what I've chosen to get paid in, the yield is actually way higher. My effective yield is close to 40%. And the way that works is essentially you get paid in LSTR tokens, which are appreciating. So then your dividends, your current value of the dividends, if you get paid in LSTR and hold it, are much higher than the value of the dividends when you actually got them paid out. So it's kind of a fun way to compound your stake or DCA your stake in LSTR. So I think that takes us to the end of all the different pages that they shared. And I know they were sharing screenshot teasers of things like the lending platform that they're working on. That is super exciting to me. I think the lending platform will generate millions of dollars in profits for LeoStrategy every year. And the reason why is because Leo stakers will be able to put their SLEO up as collateral, get a stablecoin loan against their Leo, do whatever they want. And then if they want their Leo back, they have to pay the loan back. While they have that loan out, LeoStrategy makes, I think they said it's going to be about a 5% interest rate. It could change. They're going to make a 5% interest rate on that loan. And then they're also going to market make the stable coin. So that all gets like super crazy. I could do a whole other video that's like an hour long on that. I think it's really exciting. I do want to talk about this really quick, and then it'll also lead into the market makers. In this post, they said a few people have asked what happens when Surge sells out. The simple answer is $50,000 in liquidity pools are seeded on both Base and Hive Engine. Surge LPs are priced at $1 per Surge, which is an instant 40% profit for anyone who buys in the pre-sale. And if you don't believe that that's, or if that sounds too good to be true, consider that the LSTR pre-sale was priced at 90 cents, and they told us the very same thing. Once LSTR is sold out, you're going to be sorry you didn't have more. And being that it's 60 days later and up 400%, I think that they were right. Surge on Base will start paying USDC. So if you can basically hold your Surge either on Hive Engine or Base. If you hold it on Hive Engine, you get HBD or LSTR. If you hold it on Base, you'll get USDC. Obviously, like the stable coin of the chain is what they're going for there. The cross-chain market makers will start market making Surge and profiting. Profits buy more Leo for our balance sheet. Our HE market makers do the same. LPS continues to expand exponentially. LSTR rises toward $50 and beyond. Surge holders can optionally convert their Surge to LSTR and capture the upside. And then they kind of talk here about how Surge is not a stable coin. I know this has been kind of circulating around. So it seems a lot of us, I also saw Taskmaster made a video about it. So it seems a lot of us are trying to address this and try to clear up confusion that Surge has a $1 floor, but uncapped upside. So that is kind of a key thing to understand. Go back to my lottery ticket explanation if you think that helps. So since they talked about market makers, I'll try to keep it under a minute because we're already at 25 minutes. The market making operations are very interesting to me. I was watching a video about Metaplanet earlier today, and their Metaplanet is basically trying to model after Microstrategy, but do it in Japan. And the other kind of key thing that they're doing is that they are market making around their Bitcoin treasury. So basically what that means is they're doing exactly what LeoStrategy has been saying they're going to do, for the past couple months. And now LeoStrategy is actually already doing it. And since we are on a blockchain, which is beautiful, obviously much better than being in TradFi, since we're on a blockchain, you actually can see their market makers operating. So I've been tracking some of them. You're welcome to go to Polygon and BSC and Arbitrum, and you can actually see their market makers on chain. They have various addresses for it. They're already market making Hive Engine pairs. They're already market making all the Leo cross chain pairs. And then obviously when LSTR and Surge get launched on Base, they're going to be market making all the cross chain Base pairs for LSTR and Surge. Basically, all these market making operations generate profits, and they said it's close to $100 a day already, and that will scale up. So as the Leo economy grows, that will scale up. As LSTR and Surge grow, that will scale up significantly, because now you're not only market making one token, which is Leo, you're market making 3 tokens, Leo, LSTR, and Surge. So the market making operations have the potential to generate a lot of revenue for LeoStrategy, and all of that revenue gets used to buy more Leo, expand the balance sheet further, which then leads to a higher Leo price. It leads to more LSTR market cap. It leads to more Surge in circulation. It leads to more volatility across the board because obviously, the Leo float So this is where I think the economic models get kind of interesting. As the Leo float decreases, the volatility actually can increase because there's less Leo out there and there's more USD value per Leo, which means that there's more volatility across all the various Leo pairs that are out there. And there's like 12 different Leo pairs, I think. Yeah, there's 12 different Leo pairs when you look at all the different blockchains that it's on. And then consider that Surge, they said Surge and LSTR, I don't know if it's in this post or a different one. I think it's in another one of their blog posts. The Surge and LSTR pools are going to have 2 LPs on base each. So that's 4 routes for Surge and LSTR on base. And then it combines with 4 more routes on Hive Engine because you have the swap.hive order books for LSTR and Surge. And then you've got the Leo liquidity pools for LSTR and Surge. So that's basically 8 more routes that get added to LeoStrategy's market maker. So, and that's just the cross-chain one, doesn't include the HE one. So that is 20 cross-chain routes that are getting market made by LeoStrategy with a moat because they have a whitelisted lower bridge fee. And this is just going to generate an incredible amount of inflows for LeoStrategy. I'm extremely excited to see where this goes because if you assume that even, I mean, at $100 a day, I'm surprised that it's at $100 a day already. But at $100 a day, that is, how much Leo is that? Roughly 800 Leo per day that can be bought by LeoStrategy's market makers just right now. And that's without Surge and without LSTR cross-chain pairs. And also, this all scales, like I said, as the float of Leo gets reduced, as they continue to scale up their balance sheet. As Leo succeeds, as LeoDex succeeds, it all reflexively succeeds together. So as all of this scales, does that get to 1,000 or 10,000 or even 100,000 USD per day from market making inflows? And all of those inflows go back to buying more Leo, expanding the balance sheet, leading to more derivatives that can be market made, leading to more profits, leading to more volatility, leading to more market making. It's all very reflexive, and I think it's extremely interesting. And Metaplanet actually, their slide deck, which like I said, I was just watching, they talk about how it's a vertical integration, a vertical stack around their Bitcoin treasury operation. So basically they have their Bitcoin treasury operation, and that's vertically stacked with their market making operations. And the market making operation uses that to generate profits and feed the stack and make it larger, which then leads to more market making, and it loops back into itself. It's like a gear in an engine, and those gears are all turning each other. And as you feed momentum into that engine, which is the acquisition of more Leo, and in LeoStrategy's case, that engine spins faster and faster and faster. And then it leads to more acquisitions, which then leads to more spinning of the engine. Like I said, I think this is really fascinating. I'm sure you see through the video that I just am like mind blown by all this stuff. And one thing that I like to do, and I keep saying this on threads, and I highly recommend doing it, just go to these LeoStrategy posts, and you can click the 3 dots here. This is a fun, actually, oh yeah, it does show on the video. This is a fun feature we added to InLeo a while back. If you go to the 3 dots here, you can copy raw. And what that means is it just copies the markdown text of this whole blog post. Then go to ChatGPT and just paste what you just copied into ChatGPT and ask ChatGPT questions. Ask it to explain this concisely in bullet points. Ask it to explain like your 5. Do all sorts of things. Ask it to model out what this looks like. If this continues for 2 years, what does it look like for LeoStrategy and Leo? And I just think it's a really fun exercise and something I recommend doing. It's basically the way I've been digesting all these LeoStrategy posts because they're just hammering away. I mean, the level of features, the level of communication, everything. I mean, LeoStrategy is absolutely killing it. So the Surge presale, I think, has what? Let's pull it up. There's 145,000 Surge left. So we are getting very close to the end. That's over 70% sold out. So I'm excited to see Surge get sold out and then launch on base. I want to see the market making grow. I think that market making is going to be probably, I was saying that market making was going to be the most exciting thing. I think now it's probably the second most exciting thing, maybe still the first. It's a close tie between market making and SLEO lending. I don't know which one I'm more excited about, but I'm very excited about both. So anyways, this has been 30 minutes. Thanks for watching, and I will see you soon.